Hello and welcome to Unleashed. I'm your host, Will Bachman, and I'm delighted to be here today with Joe O'Mahony, who I've been following on LinkedIn for a while. And Joe, welcome to the show.
Thanks so much, Will, and thanks. The listeners won't know this, but you gave me some really good advice prior to the call that I'm going to implement as soon as I get off this call. Thanks for having me on for lots of reasons.
Oh, you are very welcome. And I will also mention that I always ask a guest before we get started, how do I pronounce your name? Even if it's something like John Smith, you never know. Maybe they say, oh, it's John Smythe, whatever. So I
Uh,
did ask you, and I'm glad I asked because you said no, you got it right. It's Joe O'Mahony, but that's not the only pronunciation. So before we go on, some listeners might be saying, oh, he's Will's pronouncing it wrong. What's the Irish pronunciation? I don't know if I
so
could even
the
do it.
so my father's was born in Cork, and he would say O'Mahony, which, as you can imagine, for your average American or Brit, is quite tricky. So the English often say Omani, but then nobody knows how to spell that. Often gets confused with Armani, the Italian
Hmm.
clothes designer. So I like to stick to O'Mahony because everyone knows what we're talking about then.
Okay. So, and just while we're at it, we will always do it at the end of the show. But since why don't you also share your website so people can find you? If
Sure. So my website is joeomahony.com. So I think my trading name is something like Consulting Pathway, but I'm relatively, in a very narrow sense, known for some of my writing and publishing. So I go by my own name.
Great.
So you can find me at the website or on LinkedIn.
And we'll include that link in the show notes. So I see your stuff because I'm interested in consulting and I've probably liked it and commented before. LinkedIn puts it in my feed. I see a lot of your stuff. Why don't we just start by telling us what is the service that you provide to consulting firms?
Sure. Okay. So the primary service I provide is helping owners of small consulting firms, typically between 3 and 5 million revenue, scale and grow their firms to between 10 and 20 million so that they can then sell it for a decent multiple. My focus is on the equity value rather than just simple growth.
Okay. So 3 to 5 million. I mean, some would say that's small. And how many employees, how many firm members typically is a
That
firm
would
once they
be,
start?
yeah, so typically it depends on the type of firm, but you would typically be 20 to 30 people. And by the time you really want to be hitting 10 to 15 million dollars revenue in order to sell, which would typically be around 100, 150 people.
Okay, 100 to 150 people. So I'm fascinated by this topic. Tell me a little bit about when you come in to a firm, let's say
Mhm.
it's 5 million in revenue and
Yeah.
50 firm members. What are the things that you look at? I imagine, well, I shouldn't assume, but I imagine you start with a diagnostic, get a sense of the ground, but walk us through your traditional process. Maybe what's the diagnostic you do and what are the typical, work streams to improve performance? But let's start with the diagnostic. What do you do first?
Yeah. So I'm relatively lucky because I'm part-time at Cardiff University where I'm a professor of consulting. What that means is that for the last 20 years they have paid me to research consultancies, which is a real privilege. So I've interviewed several hundred owners of firms that have sold their firms, but more importantly, I guess I've surveyed 5 to 10,000 um, senior leaders of consulting firms. And that's allowed me to create a what I call the growth drivers model, which is all the kind of levers that you would expect. So, quality of leadership and management, client relationships, positioning, market positioning, things like that. And I have a series of benchmark surveys that I run, and I run a set of interviews with the leadership team, and ideally, if I can, some clients. Now, interestingly, most consultancies don't want you talking to their clients, which I always think is a little bit strange. But if I can, I'll get talking to some of the clients. Then I do, in effect, a SWOT analysis, look at their opportunities and threats, give them an approximate valuation as is, which will typically be around the 5 million mark, depending where they are. And then I say, look, if you want to sell this, what's going to tick your boxes? And typically 5 million won't do it these days. And so the idea is to satisfy the owner's equity goals over typically between 2 to 5 years, depending where they want to get to. And then I help them pull those levers. And the levers are, everything you would imagine, very often too much dependency on the founder, a leadership team that's focused on delivery instead of sales, low levels of IP, which means that you've got a lot of juniors running around asking for help all the time. And very often, all the obvious stuff about having a weak value proposition and not really marketing in the right way. So it depends on the firm what we focus on. And obviously, you can't do everything, but we'll typically focus on 2 to 3 priorities each year that really drive up that multiple.
Hmm. So it sounds like a big one is having senior leaders who are developing business, selling, and not be dependent on just the founder for bringing in all the projects. That's probably a pretty critical element. How do you work with firms to, let's say it's a firm where the founder has most of the relationships, is most of the projects are coming in because of the founder. How do you work to transition that so there's a set of rainmakers other than the founder?
Yeah, okay. So you've got to, I guess the first thing is really setting the vision for what you want to be. So, if I say, okay, let's imagine we double or treble in size, what happens to the founder? And they'll have a nervous breakdown. It's simply impossible for them to scale themselves. So you make it very clear what that vision is that the leadership team do need to step up. And then you have quite a close assessment of people who are capable of doing that in the leadership team that are capable of stepping up to the senior level. And very often, as this won't surprise you, is that especially in boutiques, people will be promoted because of their excellent delivery skills and their excellent management skills, perhaps, but not necessarily on their relationship building, problem solving, and business development skills. So, you've got to give everyone a chance, and there are different routes to making a sale. But at the end of the day, very often they've promoted 2 or 3 people that really shouldn't be in selling positions. And then the third thing is helping them develop that capability. And part of that is training and mentoring, but part of it is sometimes the owner getting out. So it's the owner, because sometimes the owner can be their own worst enemy. They say they don't want people dependent on them, and they'll say that, all clients' relationships shouldn't be coming through them, but actually in reality, very often they're quite protective over their relationships and they don't want to invite people along. So sometimes there's a bit of a mindset shift there. So it does depend on the firm, but the end state is one where the owner or owners of the firm should be responsible for less than 20% of sales.
Hmm. So the owner should be, you said less than 20% of sales.
Ideally, yeah. Because, if you think about it I mean, no owner wants to work for someone else. So if I'm buying a firm, Uh, I'm the boss. I own you and I own the firm. You don't want an earn out that's 3 years long. You want an earn out that's 6 months long.
Yeah.
And so I always say, look, you can still have 50% of sales, but it just means you're going to be working for someone else for 3 years.
Hmm. How do you do that in terms of, let's say you have some capable people who are capable at delivering projects, but they haven't been responsible really for client development in the
Yeah.
past. What sort of systems do you need to play in place, or where even do those leads come from? Do you have to help firms build some sort of cold
Mm,
outbound engine, or do you do you kind of coach firms to start having those sort of associate partner level people start
yeah.
calling past clients? Like, how do they actually do it?
Yeah, yeah. So I think there's sort of different ways of looking at this, and there's the long term view is that you want to build a competent, and this adds to the multiple. So it's not necessarily it is a cost in the short term, but it would increase the valuation of the firm. You need to build a competent system that promotes, trains, mentors, rewards, recruits people that have sales capabilities. And that needs to be complemented by a culture that it puts sales first. So even if you're a junior, you should be number one, be very aware that sales is fundamental to your career from now on. And number two, that you're encouraged to do the basics, listen out, make introductions, get active on LinkedIn, listen into sales calls and all that type of stuff. So that in 5 years' time, you've got this pipeline of very capable salespeople that have relationships and all the rest of it. That's a longer term view, but the sooner you can get that in, the better.
Hmm.
Um, in the short term, it's all the stuff you would expect around uh, marketing. So, how does your value proposition translate into marketing themes and content? Who's posting that? How often are they posting it? How visible are they? And all the rest of it. There's a good friend of mine, Mark Palmer, who sold a company called Go Beyond, and he has a nice phrase that marketing should be making snowballs for the sales team to throw, which you wouldn't, well, you would believe the number of times a marketing function is very capable, but they're just making the wrong content in the wrong way and sending it to the wrong people.
Yeah. What does it ever work for firms to hire some kind of head of business development or, a sales exec and say, oh, we just want to hire someone who's going to bring in the leads and, bring in does that work at all?
So the short answer is no. Um, I'm sure you'll get lots of messages from people saying, "Well, I recruited someone and they've done very well." So, in my experience, and I've helped over 200 firms in the last 23 years. 1 in 5, 1 in 6, 1 in 7 senior sales hires from the outside actually fulfills it. You know, puts actually performs, and prior to them coming on board, you'll hear a whole load of stuff about their black book and their strong relationships and their brand and all the rest of it. They come on board, and it's tough because, they'll always say, well, I'm obviously not going to perform immediately because I've got to understand your proposition. And then it's all, I'm building relationships. Before you know it, 18 months has gone. They've cost you a fortune and there's no sales coming. So where possible, I would avoid senior hires for business development unless you can get them purely on a results financial arrangement.
The nitty gritty about getting a CRM system in place and getting sort of the sales operations so that you don't have to have the associate partner
Yeah,
personally like sending out emails to past clients, but having some more junior person who's going to help enable that
yeah,
outreach and that consistent.
yeah. So you're completely spot on. The sales architecture needs to be part of that. So you've got the competence system, you've got the culture, and you've got what I would call the sales architecture, which is the entire IP edifice that is the heartbeat of sales in the firm. And part of that, you're right, is the CRM system. And most people aren't using that effectively. They'll see it as a technical thing that perhaps marketing should deal with. CRM, in my view, should be driven by the leader of the firm. It should be used to hold people to account. If it's not in the CRM system, you're not getting rewarded on it. If it's not in the CRM system, then we're not even talking about it. So I'm judging you on what's in the CRM system because a lot of people have a CRM system and
Hmm.
then only 50% of people use it in the firm.
50-person firms that you work with, what sort of CRM system are they using? It mostly like HubSpot or using.
Yeah, I mean HubSpot would be the Rolls Royce of the boutiques, I would say. You can the key thing is using it. It's like a professional service automation. I'm not too bothered what they use, but you got to use it and use it strategically. And it can't be an abdication of sales responsibility. And I see this very often with owners of firms who are trying to put themselves in that chair role, which is a good thing to do. But they kind of say, well, now there's, sales is someone else's responsibility. It's marketing's responsibility or
Hmm.
whoever. and it
Yeah.
just doesn't work. You need that, as well as having the architecture, you need the culture. As well as having the culture, you need the behaviors. And that unfortunately means getting off your backside and walking the corridors and building relationships and having coffee.
Before we leave the CRM topic, I'll just briefly mention that we just published a guide on how to set up and use HubSpot for a boutique consulting practice. So that
Oh,
resource is
really? Oh,
on our website.
fantastic.
Yeah. And because the HubSpot out of the box is really set up more for like a SaaS company and with, these sort of terminology like marketing qualified leads, sales qualified leads, and so and it's not really built around a relationship business. So we have a guide on how to customize all of the sort of defaults to more of a consulting firm business.
That's
Um,
great. That's great.
Talk to me a bit about we talked about sales. Talk a bit about getting a really clear positioning for the firm. So it's very clear what customer segments they serve and getting clarity around kind of defined service lines and not just sort of, oh, well, kind of we'll do whatever, right? Which
Yeah.
smaller firm might take on and just whatever comes in the door will do. As a firm
Yes.
grows, does it kind of need to start focusing more on getting specific on the service lines?
You're very good, Will, at asking very leading questions, and I appreciate that because it means I'm more confident in the answer. So yes, I always like the hourglass figure. So you've almost, with a lot of firms I see sort of, especially around the 2 to 3 million revenue mark, they often need to get smaller in order to get bigger. And it's precisely the reason that you've spoken about in terms of they have done anything to get stuff through the door, to get money through the door so they can pay the mortgage and pay the loans that they've taken out to fund the company. The challenge with that is it's really, unless you're really lucky, you've just happened to choose the three services that are high value, high growth, and you can cross sell, it's really, really hard to scale. And so I'll do with those types of firms, I'll do a fair bit of work to say, what is the one thing you want to get famous for? So what's the high growth, high value problem that you're solving, that you've got your signature service around and is on the front of your website and all the rest of it. Once they've got that clear, then the algorithm, so marketing algorithms, um, reward that type of clarity. And so your value proposition is clear, your marketing is clear, your themes are clear, and you get really, really good at that one thing. That means you build IP around it, which means your margins go up because your cost of delivery is lower once you've got IP and junior people doing things. Then, once you've hit your target, in terms of either sales or project margin or EBITDA, then you're in a position to say, okay, what's the next obvious thing that we should be selling alongside this? And it might be something paralleled, it might be something that you can cross sell, it might be a follow on service. And then you do that really well. And so, what in effect you're building out, you're getting to the level with all of these things that you've got good project margin, good EBITDA, and good IP enabling both of those things. And
Can
it's
you
that logical sequence of events rather than randomly saying yes to stuff, because otherwise you don't get that quality of revenue.
Can you give a maybe a sanitized example of a case of like what a firm was doing when you first met them and they were at the sort of 2 to 3 million mark and what they ended up focusing on to kind of that narrow down before they could grow?
Yeah, yeah, and it's even. I mean, the one in my head at the moment, and I will obviously anonymize it, is uh, a, a cloud consultancy that were very proud of their manual approach to cloud consultancy. So they would go in, they'd have very, very bright people, who all got firsts in math and PhDs in IT and computing. And they were very proud that they could get an extra 5% on of savings for even after Accenture and Microsoft and IBM had been in, they could get the extra 5%. Well, actually, when you broke down as you do, when you break down their service lines by revenue, then that 5% brought in a lot of money. But when you broke it down by margin, by project margin, actually the thing that they were most proud of was the thing that brought in the least margin. They tended to be smaller projects. You tended to have to pay very high, very expensive people, and then they wouldn't do the business development because they didn't have time. They were sort of 95% utilized. And actually, what they were making money on was the bread and butter automated approach to cloud consulting. So just by accepting that, I think they knew it, but I think accepting that and redefining their vision of the firm based on that, that they weren't a brains firm, or they shouldn't be a brains firm, they should actually be a process-based firm, enabled them to build IP, improve the profit margin, improve their value proposition, and eventually sell for a very decent multiple.
Now, you kind of mentioned in passing getting people to post on LinkedIn, and you've talked about IP a few times. When people are thinking about selling their consulting firm, how much do the following things matter to buyers? Like the intellectual property in terms of the internal processes they have, or like sample deliverables, the kind of LinkedIn engagement that the firm is getting, their website, and any kind of newsletter or podcast. So how do buyers think about those different aspects of the
Mm.
branding and content of a firm? Do some of them just like basically not matter at all, or some of them highly valuable?
Yeah, okay. So, really good question. Buy Consulting firms always go to sale with a view of what's happened in the past, and it's because that's what they can evidence. They can say, "This is our growth, this is our margin, these are our people, and all the rest of it." What a buyer's interested in is the next 3 years. Are you going to make me a pile of cash? Now, if the founders are disappearing, then what do you have? You typically have a management team that are okay, or a senior leadership team that are okay. Um, you have some clients, and perhaps some of those relationships are pretty good. So you've got a reasonable feeling that the firm's probably going to go on. But that's quite a risk if you're putting in 20 million and your job's dependent on this firm actually growing even faster over the next 3 years. So, what reassures you is a method that has been shown to work, that is a marketing machine that generates clients, that is a architecture of sales whereby you can almost plug and play the individuals, and you're still going to get high quality leads and eventually projects dropping out the bottom. So it is IP. If you speak to buyers of firms and ask them what their number one priority is, after the quality of the leadership team, it's IP. And that's not just delivery IP, which is the method and signature process for achieving results. It's also, as you indicate, the marketing IP. What thought leadership do we have? What distinguishes us from the competition? What's our website like? What's our content like? Um, LinkedIn is an interesting one. So very few in due diligence, very few buyers will spend a lot of time looking at, or at least in the past, would spend very little time looking at the contents of the CRM system, or who's connected to who on LinkedIn, as it is so much easily more measurable now than it was 10 years ago, and because there's more evidence now that LinkedIn brings in work,
Hmm.
suddenly due diligence are starting to pay attention to this. So it will depend, on who the buyer is and who the broker is and who they use. But over the last 3 years, especially, I've seen increasing attention to what we would call digital marketing.
Okay. Um, I wonder if in the future, uh, firms will start uh, providing additional value if you are showing up in like ChatGPT search results, right? Or answers,
Yeah,
right? Like what is
yeah.
what is the best supply chain firm or what is the best cloud computing firm to help me
Absolutely.
achieve my last 5%, savings? And if your firm is the answer from ChatGPT, that will probably be a helpful thing. Um,
Yeah, and then we're going to get a whole load of consultancies selling content that is targeted at ChatGPT instead of Google,
right.
which is why Google's share price has done what it's done over the last few years.
Speaking of valuation, you mentioned earlier, do you have some rough thumb rules around that? So for a firm that's 5, 10, or 20 million in revenue, how do you think about the valuation versus, is it how much does growth matter?
Yep.
How much does margin matter? Talk about that a bit.
Yeah, sure. So for those of you that are interested, I've got a little calculator
Oh, wonderful.
on my website. So if you go to joeomahoney.com, there's a little calculator. You put in some figures, and it will generate a tentative, approximate, high level value. All the caveats included. Um, as I said, a buyer or a private equity are interested in the future value of the firm. So a growth trajectory is table stakes. So if you're not growing and if your EBITDA is, if your net profit is flat, it's not made unless there's an obvious um, a lever that can be pulled to get that moving, then private equity and buyers might be interested because what they'd be thinking is we can pick this firm up for a low price, but they've never done digital marketing. So if we just do a bit of marketing, we can probably get the sales pipeline moving again.
Hmm.
Um, or if they have a very weak leadership team, you might think, oh, okay, I can replace the leadership team. Private equity, especially, will be doing roll ups. So you might, just as a general principle, the bigger the firm, the bigger multiple that it's
Hmm.
worth. You obviously know this. Some of your listeners may not. So if you combine five small firms, even if you do nothing with them other than you know make efficiencies around the back end, you can push the EBITDA up from the multiple up from 5 to 10, say.
Wow.
So, I mean that it's quite an easy way for PE to make money. So there are exceptions to the rule, but generally speaking, you want to see the healthy growth trajectory, nothing too roller coastery. You want so that's the main thing. You want to see a machine. So rather than dependence on individuals, you want to see a machine that's going to push up the multiple. The average multiple of a 10 million pound firm for say $12 million would be about 6.5 these days. So 6.5 times EBITDA.
Times EBITDA.
Um, if you're in the right market, if you've built a machine, if you have low founder dependency, if you've got recurring revenue, if you've got decent amounts of IP, for the same size firm, you can push that multiple up to 9, 10, or 11 times. So, what's interesting, and a lot of owners only realize this too late, is that rather than focusing on pushing up your profit margin, you're often better off spending some of that money building the architecture that's going to allow you to improve your multiple. So, in
Hmm.
other words, rather than spending all of your investment or time and energy trying to increase your profits from 5 million to 6 million, you actually might want to take that million and put it into increasing your multiple through, implementing a PSA system, a CRM system, training your people and building out IP. And then in effect, it will still be 5 million, but you'll be getting a multiple of 10 rather than a multiple of 8, if that makes
Hmm.
sense.
Right. Right. Yeah. Um, 10 times,
Yeah.
10 times 5 million is 50 million versus, 6 times 6x multiple of 6 million in EBITDA. So,
Yeah.
driving that up.
And just very quickly, that goes, it is really difficult because everyone's talking about margin all the time. What's your EBITDA? What's your EBITDA? And so there is this pressure to go, oh, we're 25, now we're 30% EBITDA, now we're 33% EBITDA, which is great as long as when a buyer looks at your firm, they don't think, oh my God, they've completely carved out this firm to make that amount of profit.
Hmm. Um, how do they treat the owner's compensation and when they're recalculating like EBITDA? I mean, the owner may be sort of just, you know, paying themselves or taking home like whatever is left over.
Yeah,
Like, so
yeah.
do they kind of recalculate EBITDA somehow? It's like,
Yeah, good. Yeah, really good question. So they during the sale or before the sale process, you'll have a calculation of adjusted EBITDA.
hmm,
And so all those things that you've perhaps spent on that in the normal day-to-day activities you wouldn't spend on will be taken out, which is great because your EBITDA will go up. So for example, if you've got so I'm part of a board that is preparing a company for sale. So I'm counted, I would be adjusted out so that
I see.
my fee would be taken out. On the other hand, if a founder's been taking out, paying themselves in dividends a low amount to improve profits, well, obviously you're going to increase the EBITDA um, downwards because you'd actually have to pay a CEO a fair bit to replace them. So they're primarily interested in if the firm was operating normally with a professional structure without any exceptions, what would that EBITDA look like? And that's what the multiple is going to be based on.
Hmm. We talked a bit about sales. We talked about CRM system. We talked about intellectual property and processes. Talk to me a bit about the kind of people aspect in terms of recruiting, training,
Mm,
and development of the people in the firm, and how you
yeah,
work with firms to kind of, improve that over that couple year period that you're working with them.
yeah, great. That's a really good question. So consultancies operate in two markets, and the most obvious one is the market for clients. But often you forget that actually for a boutique consultancy, when you're trying to recruit decent consultants, you don't have the brand. Why would someone come to you rather than Accenture or Big Four or McKinsey or whatever? Some really powerful brands out there, especially sometimes when you can't pay them pay them as much as well. So I guess and that's something that a lot of firms haven't paid enough attention to is how do we recruit, keep, upskill people so that they can provide better value to our clients so that we can charge more. Um, so part of that is as well as having your value proposition for your clients, you also need a value proposition for your employees. That's sort of the cultural side of it. And you need to be clear on what your values are so that you're recruiting the right type of person. What due diligence will look at is your scores on Glassdoor and other ratings. Um, and then so you've got the cultural side of it, and that being made explicit and articulated so the right people are being attracted to you in the same way that you'd want to attract the right clients for quality of revenue. Then you've got the architecture behind it. So what are your competencies? What do you recruit for? When do people get promoted? How do they get promoted? How do we train people up? How do we mentor people? Mentor people, and even down to the level that if you have somebody who is relatively new to a grade, you're not going to throw them into a deep, complex project where they're going to get scared and probably leave. So you almost want a series of grades within each grade so that, new people can be started off on something soft where they get more mentoring. Now, obviously, you can't do all of this at once because you've got to get your priorities right, and sometimes the people bit needs to slip in favor of sales. But in effect, you want to be in a position where a buyer or investor will look at your firm and say, it's not just a machine for bringing in great projects and making decent margin. It's also a machine for recruiting and developing great people.
Hmm. Who are the typical buyers of these 100 to 150 person consulting firms? Who is it like
Yeah,
what types of firm is it? PE firms or larger consulting firms? Like who's going out and acquiring firms like that?
yeah, it's really interesting because if you asked that question 10 years ago, I would say, well, it's strategic buyers, industry buyers. So typically larger consultancies that don't have a certain specialism, they've got a bit of a gap, and they just find a firm to plug into that gap. which is another reason why your proposition needs to be very focused and niche. What you're increasingly getting, and this is as private equity have so much dry powder now, they traditionally didn't like investing in people businesses because there weren't any assets. But number one, consultancies and other people business tend to be very cash rich.
Mm.
Um, Number two, actually increasingly they are developing assets. So as well as the normal methodological IP, they're also very often building SaaS products or bits of software or other recurring revenue or something like that that could be counted as IP. So private equity have got increasingly involved in consultancy. At the moment, private equity are actually more visible in the market than strategic buyers. So at the moment, private equity account for 55% of purchases of consulting firms. Now that includes private equity backed strategic buyers. So in other words, large consultancies that are owned by private equity that are seeking to buy more
Oh,
firms. But even what's interesting, you're getting a lot of firms, and you've had this for the last 15 years, really, a lot of non-consultancies that are seeking to develop consultancy arms. And we could have another whole podcast about the dangers of that. But in effect, perhaps an engineering firm or an architecture firm that thinks, oh, hold on, if we get in a strategy consultancy with a bit of innovation, we can influence clients at a senior level, and then they'll give us the work down the line. Um, the flaws in that thinking are obvious, but it hasn't stopped them, accounting for about 15% of purchases.
we've talked about IP as an important aspect of consulting firms. Tell us a bit about the IP of your practice. So, do you have like what sorts of processes do you have, or templates, or playbooks that you provide to your clients?
Yeah, okay. So I have so I run a little group called the Boutique Leaders Club. So there's about 40 of us, all of whom are owners of consultancies above I think it's above the 5 million revenue mark. And they get access to 250 bits of IP. And so that means that when they are trying to do a competency framework or create a succession plan or looking for training on business development, um, I have it. So they have access to it. They can access it whenever they want. Um, on top of that, I've got a set of benchmarking surveys so that twice a year, members of that group can do the benchmarking surveys. We keep track of where they're going and create little plans around what they need to achieve next time they see me. Um, yeah, I try and hold them to account a little bit. And then there's I guess that training bit. I've got a lot of training online, but I also deliver it face to face. So there's a whole load of material around that. And then there's a set of material around when you're getting ready to sell. So, how do you find a corporate advisor? Who are the best lawyers to talk to? What should your data room look like? What bits of documents do you need to start? So all of that type of stuff.
Mm.
I try and make as hassle-free for the owners of the firms as possible because, to be honest, as you would know, the selling process is really hands-on.
Mm. And what's your engagement model with consulting firms? Is it sort of a full day per month or a couple hours per quarter, or sort of how are you typically working with your clients?
Sure. So there's three ways. One is board advisory, where it's typically 1 to 2 days a month. The second is as part of my leaders club, and there they have an in-depth session with me twice a year, but we do monthly webinars and dinners and sort of like guest speakers, things like that. And the third is kind of one-off projects. So very often a firm will say, look, we've been a part of your masterclass, or sorry, you've been a part of your leaders club for some time. We'd actually like you to come in and do the training rather than, do it online or whatever. So I do these little projects, and it might be about value proposition, often around business development, marketing. Yeah, and that tends to be more of a day rate type of project rather than the other two.
What's the geographic range of your clients? Are they mostly UK based or
They're mostly UK. I've got 3 US clients. I've got, I mean, as part of the Leaders Club, um, mostly UK, some in Western Europe. Uh, but I mean, at the end of the day, one of the reasons I left corporate consulting was because I hate managing people. So I'm the bottleneck to my own firm, and if I was giving myself advice, I'd point that out very clearly. But there is no bit of me that wants to employ anyone. So I've got some very good ex-CEOs who I work with, and I can push work their way. But my challenge at the moment is quality of revenue. So it's having to say no to a lot of people and point them in directions where other people can help them.
amazing? Joe, it's so fun speaking with you. I could talk with you for days if you were willing.
Thank you.
Just
Likewise.
changing, swapping consulting stories and hearing your takes on the industry. You've been around it and studying it and teaching about it. Um, I'd love to have you back on the show. For now, tell listeners again where they can find you. Just share your website again.
Thank you. So it's joeomani.com. And you can find me on LinkedIn if you type in Joe Omani.
Okay, and we will include your LinkedIn profile and your website in the show notes, listeners. You can click there. Joe, thank you so much for joining today.
Thank you, Will. It's been a pleasure.